Bueno, bien, venga, let's begin. This is SPY. You might have heard the phrase, sell in May and piss off for the rest of the year, but in fact, it's not the entire year. It's just a short period for a very long summer holiday. You know, like people who teach. Wow, holidays are amazing. I'm on holiday right now. In fact, I'm just back from swimming in the sea, night swimming. Eh? And then you return to your friends on the internet with a bit of shocking news. Look at that flash. Shocking, shocking flash. Rocket Outcrop flash. It always happens. So the traders are coming back. Retail is in control. Traders are coming back. Huge buy-in in tech over the last month or so. Things are about to kick off again. Everybody's coming back into work, and not in a we're previously working at home kind of idea. No, they were all on holiday doing nothing, letting the market sort itself out, which it has not managed to do. And so here we are back at the start of the volatility season. From now until the end of the year, we can expect intense volatility compared to the first 9 months. That's exciting. Also, it's very likely that between now and the end of the year, based on every other previous year since markets began, which was a long time ago, you would likely see prices rise between now and the end of the year. So high volatility and possible strong trends to the top side. There's been big buy-ins in tech, but retail still in control. And if SPY is going to drop back down again, that's perfectly in time with this narrative. So if it's to fall from these highs to the previous lows, now I'm going to draw my finger across the screen, but you can't see that. So instead, we'll draw this guy on. El brush. Now these were the previous highs, right? Around here. And they could be well, very well tested before such times as price goes on to put in new highs, right? Having already put in highs, coming down to test that area would be an extremely volatile move. The highest degree of volatility, though, would be if it came down to this level and then went up again. That would be even greater volatility. Volatility being the dispersal of prices over a range. Now, I came up with that definition. If you hear it elsewhere, that person has been on the beach in the south of Spain. And I've been on so many beaches the last couple of weeks. I've met so many of my friends. It's been brilliant. Literally 50 brilliant friends that I've caught up with, and all with Rocky at the same time. And it's very important, that relationship, isn't it? With those people you care about and love, being friendly with the others, that sort of thing. Very important. One of the biggest benefits to our community and all that we bring to it is that support and help for each other. So keep that front of mind when you're interacting with others. Everybody has struggles that not everybody else can see. So you're looking at price action potentially coming down, filling a rocket outcrop flash, testing a 200 period moving average, a very large retracement, but only so far as the previous highs, which would be, as you would expect, price to do if it was then going to go on and put in higher highs during a period of extreme volatility. Now that period might last 3 months, but 'tis what it is. I've told you what it looks like. VIX filled the gap, came back down, putting in interesting formation here. That's the 30-minute time frame. 4 hour, you can see it filled the flash we spoke about, had a reaction, itself a little bit muted, SPY didn't go very far, and the downtrend continues across the highs. So can you expect 17 again on VIX? Well, any higher would be breaking that trend line, so it might not be sustained volatility. If that does happen, if price action does push higher on VIX and we see something in at around 24.50 or above, then you could be in for those big moves we talked about on SPY. You'd probably be looking at VIX on the daily time frame, cognizant of that resistance above the top side of the trend, seeing 50 simple below the 200 period moving average and looking at that level thinking it's going to take something special to break that 200 period moving average, which it probably would. And in the meantime, then, what does that mean for a live person? Well, let's go to the weekly time frame. A shocking week for some people. Zoom, zoom, zoom. Oh, here you're drawing lines. You don't even need, that's dangerous. My lanes tend to manifest in reality, so you've got this channel price action moving to the top side. We spoke about the potential volatility, quite well expressed in that roughly hewn line. And we talked about the potential test for in and around the levels that we see it closing at. Now, if you go back down to the daily, fair value gap to the top side, 50% retracement takes it to 85 cents. 50 simple going through the 200 period moving average is a death cross. If that's to be effective, as in have a crushing impact on price, then you would expect price to go back up to 96, fail at that level, and then you'd really start getting a little bit worried if it dropped back below 64. If alternatively price just goes down to 51, clears out that wick, as some very smart people have said, and then moves back to the top side, then you might be looking at that as an individual artifact as a double bottom. You might look left and say that overall it's already put in what could be considered a double bottom. Doesn't necessarily need to clean up that wick. Sure, there's a high probability of success should it do it and bounce. There's a large chance that price, should it fail at 86, would come back down and test it anyway. And so does it matter when and where it does it? No, what's critical is how it does it and what the reaction is when it does. So that would be how we would look at it, and that reaction would be measured with a Fibonacci retracement. If you want to know more about Fibonacci, then you can do what I did and go to the old barrios in Napoli and investigate who he was originally and follow the path of his life down to the deepest depths of Sicily in the middle of summer and scour across scorching beaches, searching in all the little restaurants for everybody who knew him, creating a background to the person so you can properly understand how he used his magic ruler. Or you can watch a video that I've got on Fibonacci. It's the best one on YouTube, and you can find it easy by searching Fibonacci and Tradespotting. Boom, there you go. Tradespotting doing you another solid there. So yeah, there's death cross, price action testing it, meeting this downward sloping resistance. Having broken above it and come back then within the formation, it's likely you do look for long-term support. So there was a whole lot of TA suggested there could be that move, along with a video and Tradespotting lines. I hope that helps you. Rocky also talked about the potential for price to slip to those levels. Now you put it all in context. If you go back to the weekly, you can look at the daily, and you can still see this level of support, prices hovering around there. Fair value gap, testing that area again. Some people would say this is a spring for Wycoff accumulation, possibly, right? But the more immediate and actionable TA is all around these 236s. This one on the daily in at around 65 cents. Break 65, 64. As Rocky says, likely you test the bottom of that wick again. And if it is, the price action pushes to the top side. Well, it would need to break that important golden pocket at 97 with 236 on a larger time frame and actually move back through those areas that it recently lost. That's what we're looking for. Measurements, particular price levels, support and resistance, all together with experience. And you got this excellent chart. So this is what we're thinking about, right? Price action now, if it does manage to break 97, you'd be looking at it come up, test 131, break the previous high at 145, and go up and test 166. That's what you'd be looking at on another move back up again. 1618 is at $2 and change. Come back and test this prior high. Very possible, having just tested these prior lows, this double bottom area, this area here, slipping back inside that prior formation, finding that long-term support, getting a reaction from a 236, breaking through a 200 period moving average, back above a golden pocket, back above the downward sloping resistance. You'd be measuring strength against the prior high, anticipating a breakage, looking at the 1618 at $2 comes across with the previous high, confluence on a breakout to the top side. Now, is that possible? Very much so. In fact, I would say it's likely, and there's SPY. In the meantime, we managed to hold in at around 6,500, which you sort of did. 6,537 on the wick down again, come anywhere in around those levels, hold that prior high, bounce at that area, could go on, put in higher highs again, and that would be excellent for things like live person. No, live person, tech firm, and AI. We've just seen the biggest buy-in to AI and tech in a 1 month period. It matches up with anything we've seen in the past half decade. So a huge institutional buy, retail currently in control, going to be topping up their accounts because they're just back at work and you've been hard at all summer on the grindstone, carving those shares out. So I've been Tradespotting all the moves ahead of the news. And you have been an excellent audience. If you'd like. Haha, there he is. Oh, there he is. Haha, yes, there he is. That's Rocky, my brother. Check him out on Wednesdays and join the Rocky Outcrop Discord. www.discord.gg/Rocky Outcrop, where you'll meet great people like yourself. And when you speak to them, be kind, respectful, and remember, we're all there to help each other. All for one, one for all. Hit the like button.